Welcome back to Investing Talk podcast. Today, we're tackling a question that a lot of you seem to be asking. Is UnitedHealth Group a good time to buy right now? We've gathered a whole range of sources, financial reports, SEC filings, analyst takes, market sentiment, really trying to give you a clear picture. Our mission, as always, is to boil all this down into key insights, help you understand the landscape for UnitedHealth Group, and, well, empower you to make informed decisions. And before we really get into it, if you find this discussion helpful, please take a second to subscribe, maybe leave us a comment. And hey, if there's a specific company you want us to look into, let us know in the comments too. We genuinely love hearing from you.
Yeah, it's a really crucial question, especially for a company this big, this significant. UnitedHealth Group. What's fascinating, I think, is connecting all the dots, the big financial numbers with the daily stock movements and what might be coming down the road, giving you that whole picture.
Yeah. Okay, so let's start right there with the basics. What exactly is UnitedHealth Group? And maybe more importantly, why are they such a dominant force in healthcare?
Well, behemoth is probably the right word. They are the largest private health insurer in the U.S., full stop. But just calling them an insurer doesn't quite capture it. They're really diversified. You've got the Optum segment, which is huge in itself. It does pharmacy benefit management, PBM, healthcare delivery, think clinics, urgent care, and a lot of tech services too. It's this integrated approach, mixing insurance with actually providing care and services. That's their core strategic advantage, I'd say. It makes them very sticky.
Right, that integration seems key. Okay, so let's unpack their recent financials then. Sources mentioned some pretty impressive revenue growth. Sounds good, right? But then there's this hint of pressure underneath. What are the key numbers we need to focus on?
Absolutely. The revenue side is strong. So for the first half of 2025, consolidated revenue was $221.2 billion. That's up 11.4% from the year before. And Q2 2025 alone, $111.6 billion. That's up 13% year over year. So, this growth, it's coming from premiums, more volume through OptumRx pricing.
Yeah.
They're definitely bringing in more money.
13% revenue growth in a quarter, that's solid. But like you said, there's pressure. This is where it gets interesting, right? Because that kind of revenue jump usually suggests profits are booming too, but maybe not this time.
Exactly. That's the core tension right now. While revenue was climbing, earnings from operations actually fell, down to $5.15 billion in Q2. That's a 35% drop compared to last year.
Wow, 35%.
Yeah. Net earnings were $3.57 billion, or 3.74 cents per share.
Yeah.
And the main reason, you pointed right at it, higher medical costs and also lower funding for Medicare Advantage plans. This pushed up what's called their medical care ratio, or MCR. It jumped to 89.4% from 85.1% a year ago.
Wait, MCR, explain that a bit more. That's basically how much they spend on care versus the premiums they take in.
Precisely. It's a key metric for insurers. A higher MCR means less profit left over from premiums after paying medical claims. So that jump from roughly 85 cents on the dollar to nearly 90 cents, that's a direct hit to their insurance segment's profitability.
Right. And 89.4%, that feels pretty high. Is there a point where that becomes a serious red flag or forces big changes? How do they even push that back down with costs rising everywhere?
That's the million-dollar question, maybe $1 billion for UNH. Look, there isn't a magic panic number, but consistently staying in the high 80s, pushing 90. Yeah, that really squeezes margins for a company this size. What can they do? Well, negotiate harder with hospitals and doctors, maybe tighten up on approvals for certain procedures, although OptumRx just eased some rules, interestingly, and lean heavily on Optum to shift care to cheaper settings like home health, which we'll get to. But the politics around Medicare Advantage funding, it really limits their ability to just hike premiums or cut benefits drastically. It's a tough spot.
Yeah. Okay, so margins are squeezed, profits are down year over year. But are they still pulling in cash, managing their debt okay? Or is this strong cash flow maybe just lagging behind the bad news on costs?
It's a fair question, but the cash flow picture still looks pretty robust, actually. They generated $12.6 billion in cash from operations in just the first half of 2025.
$12.6 billion. Okay.
Yeah, even with profits down, that shows the underlying engine, especially with Optum in the mix, is still converting revenue to cash pretty efficiently.
Yeah.
So not necessarily lagging. It's more like the diversification helps cushion the blow. They also have strong liquidity, around $77.3 billion in cash and investments end of Q2. Now, they did issue $3 billion in debt back in June, probably partly for acquisitions like Amedisys, but they also raised their dividend in June to $8.84 annually.
Right. Raising the dividend usually signals confidence, doesn't it?
It does. It suggests management feels good about the cash flow continuing, even with these margin headwinds. That cash generation is definitely a buffer.
Okay, so we've got the engine, strong revenue, strong cash, but sputtering a bit on the profit margins due to costs. Let's zoom out a bit. How does a giant like this stay on top, especially with these challenges? Talk about their market position.
Well, like I said, scales is their superpower. Being the biggest private insurer gives them enormous clout. And having Optum integrated the PBM, the clinics, the tech, creates this ecosystem. It helps them manage costs better, maybe improve outcomes, and it makes it really hard for anyone else to compete head on. It's not just one thing, it's how it all fits together.
And you mentioned acquisitions. They're not just relying on their current size, right?
Right.
Yeah, there was a big recent deal. How important was that strategically?
Yeah, the Amedisys deal, it closed in August. This is a big push into home health.
Home health, okay. Why is that so strategic?
Well, think about those rising medical costs we talked about. Hospitals are expensive. Shifting care into the home where possible is seen as a major way to control costs long term, and also often better for patients. So buying Amedisys puts UNH deeper into that potentially lower cost care setting. It's a direct strategic response to those margin pressures. But, challenges are still there. Regulatory risk around Medicare Advantage funding hasn't gone away. Competition is fierce, and they're still exposed to overall healthcare inflation.
Okay, makes sense. Let's switch gears now to the technicals. For folks watching the stock chart, what's UNH been doing lately? This is as of, say, early September 2025.
Right. So around September 9th, the stock was trading in the $335 to $350 range. It had actually seen a pretty strong intraday move, up over 7% on that specific day.
Okay. Any key levels to watch? Support, resistance.
Yeah, looking at the chart, near-term support seems to be around that $325 to $335 zone. That's where buyers have stepped in before. If things got weaker, major support looks lower, maybe $310 to $320. On the upside, resistance where selling might pick up seems to be near $355 to $360, which is around recent highs.
And what about the trend? Moving averages, momentum indicators like RSI. What are they telling us, especially given the mixed fundamental picture we just discussed?
That's a good point. The stock is actually trading above both its 50-day and 200-day moving averages.
Oh, interesting. So technically bullish despite the earnings hiccup?
Technically, yeah, that's generally seen as a positive signal for the medium-term trend. It suggests that maybe bigger investors, the institutions, see the recent issues as temporary, perhaps. The RSI, Relative Strength Index, was around 58 to 62. That's kind of neutral to slightly strong, but not like wildly overbought. It shows there's buying interest, but maybe not extreme froth. Volatility did pick up around the earnings news, as you'd expect, but it wasn't extreme compared to the overall market. No signs of real panic in the chart, let's say.
Okay. Beyond the charts and the core financials, what else has been happening? Any big news items around UNH lately? And how are analysts and the market reacting?
Well, the Amedisys acquisition closing in August was a big one, obviously. Now the focus shifts to integration. And as we covered, the Q2 earnings miss due to medical costs was significant news. But, and this is important, management came out and reaffirmed their full-year guidance. They sounded pretty optimistic about long-term drivers.
Right, that management confidence seems key. But what about the analysts? Are they buying that confidence or are they more cautious after the Q2 numbers?
It's a bit mixed, leaning towards cautiously positive, I'd say. You still see a lot of buy or overweight ratings for the big brokers. They recognize the scale and the long-term story. However, some analysts did trim their price targets after that margin commentary. So they're factoring in the near-term profitability challenge. Interestingly, you still see signs of institutional buying, like Ascent Group LLC upped their stake by over 20% in September. Some big players are still believers, maybe looking past the current quarter, but overall, recent analyst EPS revisions have trended downwards. The consensus is actually projecting a pretty steep, like 41% drop in EPS for 2025 compared to last year, mainly because of those costs. So, yeah, caution is definitely baked in.
What about insider activity? Executives buying or selling? And just the general buzz online, social media sentiment.
Insider activity showed some modest selling by senior execs back in June, but nothing huge, no pattern suggesting panic or anything, often just routine sales tied to compensation. Social media sentiment seems moderately positive. People are talking about Amedisys, how they'll manage costs. It's more focused on execution than outright fear, I'd say.
Any other notable news from the past few months, something that gives a hint about strategy?
Yeah, one interesting thing in July. OptumRx, their pharmacy benefit manager, announced they were getting rid of prior authorization requirements for like 60 chronic medications.
Oh, that's interesting. Usually it feels like those requirements only get stricter.
Right. It could be a move to improve things for patients and doctors, make their service more attractive, maybe help keep clients happy. It's a notable shift. And management also spent time publicly defending their Medicare Advantage business, which is always under scrutiny from regulators and politicians, showing they're actively managing that narrative.
Makes sense. Okay, so looking ahead then, what are the next big things investors should watch for? Catalysts, potential game changers?
Short term, all eyes are on the Q3 earnings report. That'll be late October. That's the big one. We'll get an update on Amedisys integration, see if those medical cost trends are improving, sticking around, or getting worse. That report could definitely move the stock.
Right.
Also, you've got the ex-dividend date coming up in September, and then October 1st is the launch of the 2025 Medicare Advantage plans. So we'll see what their offerings look like for next year.
And longer term, beyond the next quarter or two?
Long term, it's always about regulation. Any new laws or rules affecting Medicare payments, insurance regs, those are always huge potential catalysts or risks for UNH.
Always hanging over the sector.
Absolutely. Also, watch their future M&A strategy. Will they buy more in delivery, tech, PBM? That could shape future growth. And fundamentally, how they manage healthcare costs through 2026 and beyond. Can Optum really bend the cost curve? That remains the central question, I think.
We also heard some rumors. Anything interesting bubbling up in the market chatter?
Yeah, there's always some speculation. One bit of chatter is about potentially selling off some non-core parts of Optum, maybe to raise cash or focus. Talk of major regulatory changes is kind of constant given the political climate. Some analysts are wondering if they might boost their share buyback program if cash flow stays this strong. And there are whispers about maybe another acquisition or partnership, specifically in AI-driven health services, to beef up Optum's digital side even more.
AI and healthcare, definitely a hot topic. Okay, let's talk risks. Every investment has them. What are the specific ones for UNH that people need to have on their radar?
Well, company-specific, the big one we've hammered on is that profitability pressure from high medical costs, especially in Medicare Advantage. That's front and center. Then there's integration risk with Amedisys. It's a big company to absorb. If that doesn't go smoothly, it could drag on results. And, as always, legal and regulatory uncertainty. Healthcare reform talk, government audits, new rules. Their size makes them a constant target. It's just part of the business.
Right. And what about broader risks, things affecting the whole market or sector? Healthcare is often called defensive, but does that hold true for UNH given its specific mix?
It's mostly defensive, but an economic downturn could still hurt. Fewer people with employer insurance, maybe more pressure on government budgets impacting Medicare, Medicaid. It's not immune. Yeah. Regulatory volatility, as we said, is huge. Changes to government policy, drug pricing rules, those can hit the whole sector, and UNH especially hard given its footprint. And even though it's defensive, sharp rotations out of healthcare, maybe driven by policy news, can cause short-term pain for the stock price, even if the fundamentals are okay.
Okay, so we've covered a lot of ground. Let's try to bring it all together. What's the final assessment on UnitedHealth Group, especially for someone thinking about buying now, early September 2025?
All right, boiling it all down. Our analysis lands UnitedHealth Group at an overall rating of, let's say, 6.5 out of 10.
6.5 out of 10. Okay, let's unpack that. What are the positives driving that score? Why own it?
The positives are pretty clear. You get dominant market scale, which is a huge advantage. You get diversified revenue streams, insurance, plus the big Optum engine. You get really strong, consistent operating cash flows. And an attractive, growing dividend, which signals financial health. Plus, that recent Amedisys acquisition looks like a smart strategic move for the long haul, positioning them well in home health.
Okay, those are compelling positives. What about the negatives, the things holding the score back from, say, an 8 or 9?
The main drags are those margin pressures we talk so much about. Higher medical costs, especially hitting Medicare Advantage profitability. Q2 really highlighted that. There's also the integration risk with Amedisys. It needs to go smoothly. And just the persistent regulatory uncertainty that hangs over the entire sector, but particularly a giant like UNH. It adds a layer of caution, especially near term.
So with that 6.5 rating, the pros and cons, what does it mean for valuation? Is it cheap? And what kind of investor is it best suited for right now? Short-term trader, long-term holder?
Yeah, valuation-wise, it's not exactly trading at a deep discount compared to its own history. You're not getting it on sale, let's say. The ongoing cost inflation, the potential for regulatory changes, they justify some caution for new buyers right now. For short-term trading, outlook seems kind of neutral to maybe slightly positive. Expect volatility around Q3 earnings, but those cost headwinds probably limit any huge quick upside moves. For long-term investors, it's what I'd call cautiously constructive. If you want a core holding in large-cap healthcare, something with reliable cash flow and a decent dividend, UNH fits that bill. But you have to be willing to accept the near-term uncertainty around margins and the constant background noise of regulatory risk.
Wow, that was an incredibly thorough look at UnitedHealth Group. It really shows, doesn't it, that investing is rarely just a simple yes or no. So many layers to peel back.
Indeed. You really have to understand how everything connects to the financials, the market mood, the regulations, the company's own strategic moves. It's about seeing the whole picture, not just one data point.
Exactly. And our goal here isn't to give you the answer, but hopefully give you the tools and the context to figure out the right answer for you. So maybe a final provocative thought to leave you with. Healthcare costs just keep rising. How well can even a giant like United Health Group balance its own growth goals against managing those costs and dealing with all the regulatory heat? What do you think will be the biggest factor for UNH over the next year? Well, thank you for joining us for this discussion on United Health Group. We hope it gave you a clear perspective. Please make sure to subscribe, like, and comment to stay up to date with Investing Talk podcast. Until next time, happy investing.